In today's Bitcoin update, the theme is where and when we expect corrective price action to revert higher. We will discuss liquidity zones and predatory market maker behavior to which we are poised to exploit for our next long setups. If you are new to the channel, our daily updates are short format summaries of our market perspectives and trading strategies. We are a team of investment professionals leveraging our careers in traditional finance as traders, market makers, and portfolio managers for top-tier institutions, having transitioned to proprietary traders of digital assets. We have developed a methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs. Our approach translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms with a focus on market structure, liquidity, volatility, and time-price volume relationships. Please note, our content is not investment advice, or is this an educational channel? It is intended for entertainment purposes only. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. Bitcoin remains in a corrective phase, descending as low as 66,000 in today's London session. Weakness has been fueled by liquidations of late leverage longs in the prior week's impulse to 69,500. Buyers have yet to step in with fresh demand in significant volume, leaving the path of least resistance lower in price. Another sign of exhaustion was the first net negative flow in Bitcoin ETFs, following 7 consecutive sessions of net inflows. Correspondingly, volatility markets show increased caution as the call-put ratio tightened, albeit still positive, on renewed demand for buyers of protection via puts. Sentiment remains positive according to the Crypto Greed and Fear Index, up incrementally overnight from 70 to 71, deeper into greed. Futures open interest also remain near all-time highs, and perpetual futures funding positive, reflecting expectations of higher prices. Looking forward, economic data is light this week, thus quarterly earnings are the only data with potential implications on correlated risk assets. The focus remains on US presidential elections, while geopolitical risks from tensions in the Middle East loom in the background. Volatility markets highlight this event risk, with implied volatility elevated and rising in recent sessions for option expiries subsequent to the November 6th election date. With respect to the trajectory of price, in the absence of a positive catalyst, we expect corrective price action to persist into the weekly close and the near-term path of least resistance lower. Levels to the downside and the next potential inflection points of interest and zones of concentrated liquidity are at 65,800, 63,000, and 61,500. We expect Bitcoin to descend to these zones, with probability of an inflection higher increasing at each successive level, before ultimately resuming trend higher to make a renewed attempt at an all-time high. In the event of renewed signs of strength, targets to the upside to which we expect a reaction are 67,000 and 68,500. In terms of strategy, long-term bullish market structure remains intact, and invalidation levels not within close proximity. Locally, however, the trend is lower. This being said, we have reduced our directional bias from long to neutral, having taken profit at our target level of 69,500 over the prior weekend. We are monitoring time-price volume metrics and indications of absorption at aforementioned high probability inflection points to the downside, to which we will potentially leg into new longs, to which we will set our take-profit targets between 70 and 72,000, where the highest concentrations of liquidity reside. Given the foreseeable significant event risks and potential binary outcomes, we are exercising patience and conservatively scaling our positions. As always, do your own research and analysis. Be safe, and good luck in trading.